Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 4th May 2022. In the international market, last Friday, US 10-year had touched 3% intraday and has not crossed yet. US 10-year is now trading at 2.97 percentage points, but Fed's FOMC outcome is expected today, and market is expecting 50 basis points hike. More importantly, Fed's balance sheet reduction and quantitative tightening are the main two reasons for the worry for traders. A minority of the economists have now started predicting Fed will need federal fund rate at 4 to 5%. I repeat, federal fund rate at 4 to 5% to bring the inflation below 3%. That's what a minority of economists have started predicting. In the interesting yield curve part, US 5-year yields are now trading at 3.02, 10-year at 2.97 and 30-year at 3%, which means 5 to 30-year yield curve is almost flat within 5 basis points. In the global bond markets, Germany 10-year bonds have now hit 1% mark, which is the highest in 7 years and is currently trading at 0.97 percentage points. Indeed, we are living in a high interest rate scenario and we are going to see 1970s and 1980s once again. In the crude oil market, crude is trading at $105.80 per barrel. Short-term range for crude is 105 to 112. In the currency market, dollar index is at 103.40. Today's range 103.23 to 103.87. FOMC meeting outcome will accelerate dollar index strength. USD CNY or Chinese yuan at 661, pretty much stable. USD INR with a low of 76.51 closed at 76.51 near day's low. Resistance at 76.35 and support at 76.75. Trading strategy for USD INR based on the outcome from Fed FOMC, we may see dollar outflows from Indian equities and sell-off in the INR. Hence, we expect USD INR to touch $77 per dollar pretty soon based on the Fed's outcome today. In the domestic market, GST collection at 1.68 lakh crore is the silver line in the dark sky of Indian finances. The Indian bond market was largely driven by auctions on Friday. Monday was pretty much non-action day except few SDL auctions. On Friday, 654-2032 cutoff was set at 7.17 when the market was trading at 7.15. Night research was anyway expecting weaker demand, but 7.17 cutoff without any development is a positive sign. On Monday, 574-2026 closed at 665 versus 667. 654-2032 closed at 712 versus 714 and 667-2035 closed at 732 versus 733. The minor rally in 654-2032 was continued on Monday as well as the traders tried to cover the short positions created when the 10-year was at 707 2 weeks back. Trading range for 654-2032, 711 to 715. Night research view, SDL spreads are too low. Exit SDLs as much as you can. Markets will be range bound today, but Fed's FOMC will drive our markets tomorrow. That's it for today. See you tomorrow with the new episode from Night Snippets.